while you're watching what happens across the world, in the Middle East, and even in the Russian-Ukraine situation. What's happening here? It's amazing. When we're worried about this, we should be worried about this. This year, and even in this last few weeks, we've seen major problems with our banking. Let's talk about it today's video and how it impacts you more than anything happening across the world. This video starts right now.
I'm gonna let the sun shine in today, and I will leave my windows open so that I can.
Hey guys, welcome to the Max. Thank you so much for being here. We are inside today because we're actually out of state. We're having to do some things out of state. So, hey, if you're new to the channel, go down here, press subscribe, ring the bell, give us a thumbs up or a thumbs down. I'm glad that you're here today. Now, let's talk about some of the things that we're missing. We're missing the fact of what's actually happening here in America while our focus is on everywhere else. We need to focus here. Now, we've talked about focusing on our border. We've talked about focusing on the fact that the speaker situation is in shambles. We are a joke when it really comes to the world. We have a feeble old man leading us, so there's a lot going on. But one thing we're missing. Did you know, just in this year, and just in October, bank failures and bank collapses and bank closures are astronomical. They're up tremendously. Let's talk about the numbers and how it affects you. I'm reading from a Zero Hedge article from Michael Snyder. It says, during the first week of October alone, U.S. banks closed a whopping 54. Bank of America closed 21 of their branches. Wells Fargo closed 15. So in 1 week alone, the biggest banks closed over 54 branches. Now, you don't believe that's a banking issue and a banking crisis, and also that, and really not that. Think about it. Your access to your money. If your local Wells Fargo or your local Chase closed down, even though I don't believe in the national and bigger banks, how do you know your money is safe when you have to go down the road? You can't actually get it from that one that you were used to getting it from. So 54 locations just in 1 week alone in October. Last year alone, when this crisis really started, there was over 2,000 banks closed, branches or main staples closed last year. And the thing is, it's not going to get any better. Here's why. We dealt with a housing crisis in 2008 and 2009, and it's going to come back around because houses are too inflated and interest is costing too much. People are not buying too much house, they're spending too much for less house now. You're paying too much per square foot. So that's going to be a problem in itself. But here's the real kicker. The major crisis that's going to happen because interest rates have went up, you're going to see a commercial crisis, a commercial credit crisis. Money that has been borrowed from business sides that have maybe adjustable rate mortgages, some kind of balloon that's fixing to take place. Also, people are not going back to the offices. Leases are falling through. Businesses are struggling. So therefore, the banking is backing those businesses. Commercial businesses typically were pretty easy to take on that risk. So a lot of banks were able to invest in them, give them high risk money because they wanted high reward. Well, now all of a sudden when the money is not free anymore and the interest rates are higher, you're going to see a lot of these big companies not being able to pay. Bankruptcies in this year alone, are up 61%. 61%. That will affect the bank's bottom line because now they're having to assume the liability or the businesses that are not paying them back the interest and the money of principal. And also banks are over lending. They're not able to have that fractional reserve and they don't have the money to back. They're struggling with money. The banks are actually looking at the Fed to say, please keep the emergency door open so they can keep borrowing money from the Fed. Well, the Fed is actually down too. Have you seen their balance sheet? So we're seeing a banking crisis that shut down thousands of banks last year and is already shuttering hundreds of banks this year. And it's not getting any better. When you start seeing the bigger banks buy in the little banks, which you've seen, the regional banks, you're starting to see the problems with commercial credit. When we changed the interest rate over the last year or two, basically, and it's climbed up. Remember, most businesses have loans based on 1, 3, or 5 year lock-ins, meaning after that they're going to balloon or adjust. So if you start seeing some of those adjust this next year because it may be the third year of all these interest rate hikes, do you believe these businesses can make it? If they can't, they're going to cause more stress for the banks. So what does that mean for us? I think there's two things that's going to happen. Either you're going to see more bailouts over the next few years where they bail the banks out or they let the banks get assumed by the bigger banks such as the JP Morgan Chases and the Bank of Americas and the US banks and the Citigroups. If you start seeing that, you're going to see the movement to where government and big banking are tied together. It almost reminds you of how government and Pharmaceuticals are tied together, government and big food are tied together. It's just tying up all those loose ends. Where you wanted to go to your local mom and pop bank down the road and you could trust the loan officer that has your money and you could see the banking financials, see that they're strong, that day and time I think is gone, and you're going to see the bailouts. Well, what does that do? The bailouts cost you money. So if they take over these banks or they keep putting money in there, it's going to make government power in these banks, and they're going to set policy based on what they believe. You're not going to have an independent banking financial system. You're going to have it fully dependent on the government and on the Fed. So what does that actually mean? Here's the main thing. If the government has more power over the banks, there's not as many small local banks or federal credit unions because they've all been absorbed by the bigger banks. The bigger banks are tied to the Fed. So now you have the Fed, the big banks are all tied together, and then you have the government. Well, what has the government been wanting to push? A global push for CBDCs, a more digitized currency. Well, that's already happening. The bigger banks are already accepting that. You see some big banks pushing certain cryptos. They're coming out with their new coins. What are they doing? They're setting up for this CBDC. So while we're worried about everything going on and we're promising hundreds of billions of dollars across the world, all the while our banking financial system is literally crumbling. Did you see that Janet Yellen, our Treasury Secretary, said that if the interest rates stay high and they keep going up, the U.S. government is going to struggle paying their own debts? Go back and look at it. She said that it would literally struggle paying its own debts. And remember, it's hurting you more than it's hurting the government. They can keep printing money. You can't. So all the while you're watching everything going on across the world, the banking industry is struggling. And the banking industry struggling is going to cause for more problems for us to keep cash. And you're going to see our financial institutions start deteriorating, going back to a big bank, a globalist push, a more world-style bank, and CBDC comes right on in, which means your privacy is gone. There was an article that came out that said the more that CBDC comes in, the more that we digitize all our money, the less privacy you have, because someone of some facet will know what you're purchasing. Either your credit card companies know, either the companies that you're using the direct drafts know, or the cash apps know, the way you use your phone knows. The only way that you can get out of that is bartering in cash. Well, if they struggle, if they make the banks struggle, the banks sell out or get absorbed, the big banks believe the Fed, they work together with the government and make CBDC come in, then they control your money. Remember, our system only works when people spend money. It's a debt-driven, consumer-driven style economy. That's not good. I wish we were back on the gold standard. But because we are consumer-based and credit and debt-based, what does that mean? They need you spending money. If they make CBDCs happen and they put certain stipulations where you have to spend it in a certain amount of time, almost like a grant where you're granted this money, but if you don't use it, it goes away, then what are you going to do? You're going to spend your money. You can't save money. Then you are at the beck and call of the government, the beck and call of the big bank. And that's a big deal. Focus on what's happening here in America and not across the world. We have no speaker for the Speaker of the House, for the representatives, for the Republican side. What are we doing? I like Byron Donalds. I have no problem with him. I had no problem with Jim Jordan. But it looks bad on us, especially when we have a weak first and second person, which is our president and vice president, and then we can't even fill the third role with the Speaker of the House. That's not good. So call your congressman, tell them to get their junk together and start getting a strong speaker and start worrying about what happens here and not everywhere else. Do research on your bank. Make sure your bank is strong. Make sure you're invested in local credit unions or local banks, and hopefully they'll hang on for the ride and be strong and have strong assets and quit doing bad policies and bad lending. Guys, thank you for watching. God bless. Happy home.
The darkness starts to fade. Feels like things are gonna go